Hello viewers, welcome back to the daily post-market analysis of Nifty index. So in this show, we analyze Nifty's behavior using the price action, trend lines, Fibonacci series, and the support and the resistance zones. So based upon the analysis of current session, we plan the possible trades and how Nifty may behave in the next upcoming session. So, as usual, with any kind of stock market activity, there is always inherently risk include is. So, kindly make your decisions after due diligence and also consider the kind of risk you may face. Okay, with that disclaimer off, let us get into the analysis. So, in the yesterday's analysis, uh, I have mentioned that there is a strong support below 17,800 and resistance around 17,960 area. And until either of these resistance breaks conclusively in the sense that the price by end of the session, the price that is Nifty should close below that particular support or above that particular resistance area. So until either of the support or resistance is broken conclusively, price may play in between is the conclusion from the previous day's analysis. So once a firm direction is established, we can trade along with along the direction. So based on that analysis, I have recommended a particular trade setup that if Nifty opens between 17,900 and 18,000, don't take any longs until 18K level is breached and price stabilizes there. Short Nifty somewhere closer to 17,960 area or 18K level area, depending on the price action, with target of 17,800, and add more short positions if 17,700 is broken. So, like the analysis um, has uh, turned out, Nifty in the current day session, it opened at 17,920, and then uh, it tried to go down. It broke the 17,800 support, and it even has broken down the lows of December. About 17,770 was the low in December. It has even broken that particular support, and it made a new low for this particular downtrend today. That is 17,762 here, and then it found strong support from this particular support area which I mentioned yesterday, that is 17,000, between 17,700 and 17,800. So this particular 100 point or about 120 point area is quite a good support zone. So it found strong support, and it eventually closed higher than that particular support area. But one thing we have to note from the daily candle is that the daily candle is a short red body. It closed lower than the previous close, and it made a new low than the previous candle. So this is still a bearish move, and the overall bearish trend is still intact, though the support is playing out strongly. So this is what we can infer from the high level daily candle. Let us dig down a little deeper to look at what happened during the intraday. Let us look at the intraday price action. So intraday Nifty opened slightly above the previous close, and then in the first 15 minutes itself, Nifty got sold off, and after that the sell-off intensified, and eventually Nifty kept breaking the supports like here. Sorry, this is what this right? Yeah. Oh, okay. I'm sorry. Uh, so the first 15 minutes, Nifty did face sell-off, but eventually it recovered a bit. So by 10 o'clock or so, it hit. Oh, damn! This is also okay. Right. So where are we? Here, right. So throughout the first hour, Nifty got sold off, and so where did it find the support? After the first hour sell-off, around 17,830 area. So here there was some kind of a support for about an hour, we can say, and then Nifty broke below 17,800, which is a good support area. It tried to even go lower because, as you can see, there is no support wick in this particular 15 minutes candle. Eventually, after that session, it found some support and price tried to move up, but then the bears pushed it down again. It this time much lower. So one thing that we can infer is the resistance is present and support is present, and both are real. So bears are trying to push the price, and the bulls are buying in and trying to push the price up. So towards the end of the session, the bears gave way and bulls moved the price a little higher to close it above 17,800. But the price is still, what do you say, lower than the moving averages even in that 15-minute time frame. Looking at the hourly time frame, okay, this is a clear downtrend. So every time price got pushed down, there is a little support. Bears are giving a leeway, and then again they're pushing it down. So this is looking at the 1 hour trend. It doesn't appear to be a sideways trend, but kind of kind of intense downwards with a short kind of recovery. So yeah, support is visible even in this 1 hour time frame, and price is trading below all the moving averages. So whatever time frame you see, the bearish trend is still intact, and support is also really present there. And looking at the moving averages at daily level, Nifty opened above the 100-day moving average, the green line, and it closed below that. It actually tried to go much lower, and like we said, the support played out strongly. But again, towards the end of the day, it closed below the moving average. And we don't, the 200 EMA is much farther away, about 17,300 area. Oh yeah, who knows? Maybe if this particular 17,000, what say 17,700 area, or 17,670, I think this zone between 17,000 six. So where is it exactly? 17,650. Yeah, 17,650 and 17,800. Let us say 150 point zone. So if this particular zone is broken, we may see a test of the 200 moving average. Yeah, it all depends on how the price action is going to unfold in the upcoming days. Okay, and there are no trend lines immediately present to give any support or resistance. The rising resistance line is a little far away. And looking at the Fibonacci retracement on daily level, so the retracements from December lows, the price already has broken the December low, but it finally closed above. So this, so even the Fibonacci retracements tell the same story. This support has to be broken for a, let us say, for further stronger down move. So until then, price can play a little consolidation. There may be rebounds in 1 or 2 days. We don't know the price. So unless the support breaks, anything can happen. And looking at the larger Fibonacci retracement from the highs of December 1st, from the all-time high. So even here it tells the same story. 17,820 level. I think that played out as a small intraday support. 17,820 level, which corresponds to 50% retracement in from the December 1st all-time high. If this breaks down, the next support is at around 17,565. So that is what about 300 points from the today's close. I don't think it may happen in one session, but eventually it may. Okay, right. So looking at the 1 hour time frame chart, so a retracement from the lows of 6th Jan has gone up to 78% on 9th Jan, and then Nifty. So this was a kind of bear trap here. So after 6th Jan on 9th Jan, that is on Monday when Nifty opened up, it quickly rose with a strong bullish candle, but it was not a what you say a confirmed bullish move. The next day itself, Nifty fell off, evaporating any gains people may have been leaving them on the table. So finally, Nifty managed to break that low, but yeah, the support played out and it closed above. So once the support is conclusively taken down, that is, if Nifty towards the end of the day, if Nifty manages to close below the 17,800 or 17,760, 770 levels, then we can see a break of 17,700 also. Eventually, the support zone can maybe taken down. When we will see when that happens. So as of now, Nifty is kind of trying to, the bears are trying hard to push it down, but there is strong support. So we have to consider this as a ranged movement. So Nifty is kind of boxed between 17,800 and 18,000. That's 200-point range. Okay. So yeah, so after analyzing using these price action, trend lines, and Fibonacci retracements, the conclusion that we can make about the current session is that candle is a bearish candle, but with a small body, and the support wick, a strong support wick, is present. Candle made a new low and closed lower than previous candle. So overall, the bearish trend still holds, and the trend is down on daily basis. VIX has fallen about 1% compared to the previous value. So which means any puts, mostly puts which are closer to the expiry, or puts which are closer to the strike price around ATM, they might have lost some value compared to previous lows. So these three are the nearest supports. The first support is at 17,800 level, and the next support is at 17,760, which is almost the low made today. And after that, if price manages to break that support, it will face a further support around 17,700 area. And if that also breaks and price manages to stay below it, then traders, we have a probably further big down move after that. And resistance is, first resistance is at 17,930, and after that like 960, and eventually the stronger resistance at 18,000 level. So the observation is on, and the conclusion is the same as yesterday. The price is still ranged. Once a direction is established, we can then build positions and trade along that direction. Until then, um, depending on your risk management capability and capital, play with strategic positions. So the possible trades for tomorrow are if Nifty opens between 17,900 and 18,000, don't go long until 18K level is broken. Short closer to the resistance level and expect a target of 17,800 and add more if Nifty stays below that target and if Nifty is about to break 17,700 like that. And if Nifty opens between 17,800 and 17,900, that is somewhere within the current body or uh, closer to the closing price, then wait for the price action. See if Nifty moves and tests up a resistance or if Nifty moves down to break a support. Depending on that, initiate short positions, but no longs until 18K level is broken conclusively. And if Nifty gaps down, that is below 17,800, and if the gap and actually gap down has to happen below 17,760, and if that happens, most likely the supports would be taken down. So in that case, okay, another thing also can happen. If the gap down happens, because the particular area, unless 17,700 is broken, that area can offer some support. So there can be a quick rebound to close the gap, and even maybe Nifty can even fall down after that. So watch the price action in this case also, and if you are shorting, sell calls with a stop loss of 17,900 and add more positions if 17,700 is broken. And if you're buying puts, wait for probably a few 15-minute candles to see the price action and wait for the VIX to settle down and then buy puts with the target of 17,700 and add more if it breaks down. So in the case that 18,000 uh, price opens above 18,000, ensure that the opening is sustained and then add long positions. And in any case, if 18 price opens at above 18,000, most likely it may not sustain there because given the kind of current resistance Nifty is facing, any opening above will be used to sell it off. So even if Nifty opens higher if it makes a higher move also, this can be another bear trap. So watch cautiously. And another, let me say, a conspiracy theory is that tomorrow is the 13th, Friday. So who knows? We may see a bloodbath. Oh, this is just a conjecture, complete pure speculation. But yeah, just saying because the date happens to be so. Anyway, so whatever may be your view, uh, so manage your capital well, safeguard your capital, manage the risk well, and I wish everyone they have a good trading day and then a good weekend after that. See you in another analysis.